I think the first thing I would like to get your thoughts on is what you think is driving the volumes we're seeing recently. Over the last few sessions, we've seen the market trade closer to 3 billion, 4 billion, thereabout, in terms of market turnover. That's, of course, much higher than what we were seeing maybe just about a week ago. Your thoughts on what is driving that? I know that the activity around UBA is a factor, but I think there are others as well.
Hi, Wole. Yes, I mean, to be honest, the UBA story, UBA is only about 6% of the NGSC banking index. So whilst it has done well, I don't think that it has been can single-handedly be classified as a driver. I think it's been the whole suite of large banking stocks. I think on the whole, you know, obviously at the start of the year, investors kind of reset their clock, so to speak, and they have funds to deploy. I think the international investor space is still dominating, and they still have strong liquidity positions. And I think that the general tone is that they are, you know, Nigeria delivered well last year, and whilst no one's expecting this year necessarily to be as strong, there is a more constructive sort of context than we were experiencing this time a year ago, you know, both in terms of the Eurozone and in terms of the US. You know, the US, this time last year, we had an election ahead of us, we had, you know, fiscal considerations, we had all sorts of issues. And those issues are not so pressing, you know, January this year. All
right, so the coast is clear, if you like, for the market to rally this year, of course. And there is a sense that after the market rallies 1 year, there's a sense that more people, it advertises itself, if you like, to the market, and so
to some extent,
more people get involved. But let me get your thoughts on the banking sector. It's leading the way so far this year. We like the likes of FCMB up over 30% already, giving back some of those gains today. But the tier 2 banks are clearly in the lead. And to what extent would you agree that this suggests that that is where we should be investing in the banking sector in this year?
I think it's a combination of things. You know, on the one hand, obviously the sort of re-rating of the large banks last year was the key for the sector and indeed the market as a whole. I think that investors are still looking at those names, and if we look at the daily value traded, we'll still see that the big banks dominate by some margin.
Right.
But people are also looking for, you know, an extra sort of kick, and it's more reflective of, one, greater confidence from the internationals. Our expectation is that the cost of money in the market will grind downwards this year, which is better for the second-tier banks, for the smaller banks. Yeah. So there's a prospect for a better sort of fundamental performance from them. And then, of course, you know, the domestic investors who feel that they may perhaps have missed the boat last year and are at great pains to enter GT at, you know, 2.678 times book, may look at you know, the tier 2 banks who have yet to kind of fully re-rate. So I think it's a combination of those things that are driving the second-tier banks.
What are the big themes you're looking at in the banking sector for this year? Some people suggest cost containment. It was a big issue last year. We've seen a lot of banks focusing on how to drive down cost. But of course, everybody's expecting to see loan growth at some point. In your view, what would be the big theme that would set the scene for the banking sector this year?
Well, to be honest, we can't have a big thing every year. You know, some years are going to be bread and butter, pedestrian kind of years. There's a possibility that this year is that way. You know, last year obviously was a big re-rating year. You know, this year, I think that there's prospects of growth, but it's not so dramatic. Some of the key drivers of loan growth that we envisage over the medium term are not necessarily going to come through strongly this year. I think that power, even in its current stage, is a half-two story in terms of, you know, momentum, in terms of lending, and even that we don't expect to be a significant, you know, sort of driver of loan growth. So it's going to be the usual suspect type sectors until, you know, until the newer sectors like power, like agriculture, kick in a big way. And I'm not certain that is going to be an event for 2013. So it's basically getting all your ducks in a row, ticking all of the right boxes, managing costs, managing your cost of funds, and managing asset quality, which is really what the Nigerian banking sector in its current form is about.